Hey everybody, I hope that you can hear me well and hopefully I'm not too loud. This is a video on some entry timing tips and how to maybe time your trades. And please subscribe because today is actually my birthday and I'm recording a video on my birthday before I go and enjoy myself because this is a topic that I felt I needed to talk about. And I'm thankful, for being on third shift as an employee on third shift at my primary job because it's kind of forced me to learn about futures and trading futures in the market has made me more confident and aware when it comes to trading all equities. So let's get started. Quick disclaimer, I'm not a financial advisor and I'm not providing investment advice or trade recommendations. All of my content is strictly for informational and educational purposes. Past performance is not indicative of future results. Options are risky and they are not for everyone. So please read the characteristics and risks of standardized options before investing in options. And for futures, there's even greater risk. So explore this page before investing in futures. But I'm just sharing what I've done to get a return on my investments as a retail trader, just like you. God bless. So, sorry, y'all. Time in the market is near impossible. But look, here's how I patiently wait for what I consider to be a decent entry. So this is a question that I ask myself, and I'm wondering if anyone has ever gone so deep down the rabbit hole into trying to time their entries that they ever ask themselves, is your symbol bullish, bearish or bullish when there's broad market volatility goes from a state of contango to a state of backwardation? If you haven't asked yourself this, then you probably should. You may not even know what contango and backwardation is, but basically contango is based on market action. The price is expected to rise over time, and backwardation is based on market action. Price is expected to decrease over time. So here's the thing, expectations, they can change over time. So these environmental states can be temporary, but in particular symbols, these can also spell opportunities for a while. Like in one particular symbol, this can also spell opportunity in a wide variety of symbols. And that symbol is actually /VX. I didn't type it here because we're going to head to VixCentral.com and I will show you some stuff. Okay. So here we go. Let's pull up VixCentral.com. Boom. Let's pull it up and let's pull up a window for Thinkorswim as well. Okay, so we got a window for Thinkorswim up and we have VixCentral.com. So look, if you go to VixCentral.com, this is how the main page looks. We're going to click on Contango. Once we click on Contango, we can see a whole lot, a long line chart, right? This looks kind of confusing, like what are we actually looking at? So basically, we're comparing VIX futures and how VIX futures front months look compared to the VIX futures back months. So think about that. A further month away, if a further month away, the price is higher, then that is a state of contango. If the closer months the price is higher, that is a state of backwardation. So the closer months are higher than the back months. So the way we can look at this chart, and we can look at just when it's below that red line, but that may not necessarily tell us something. So let's not choose a time that was super obvious when a lot of things dropped. And what time is that? Look at that. We're talking about COVID-19, February, March 2020. We don't want to look at that. Let's look at something that's a little bit less obvious and a little bit smaller. And then we'll zoom in on just that feature. Let's look at 2018. Let's zoom in on this area right about here. So, and in fact, let's get just a little bit closer. Let's just get right up in there. So let's take January 31st and let's go to February the 8th. And here's the reason why. It's not enough to just look at the line chart, guys. I want you to look at the the numbers and how they change. So on this first date, let's look at January 31st, F1 to F2. We're only going to focus on F1 to F2 first. So the front month, the change from month 1 to 2, and that's the expiration. So I told you that the prefix symbol is /VX, /VX. I'll put this over here, /VX, and you can see that it starts to show a future. And when you want to go to the next, the next each month rather. So for August, we're going Q. August is the symbol for August is Q. The symbol for September is U. October is V. November is X. December is Z. But you don't need to know that. You could probably just type in /VX and then you'll see some of them populate. But we'll just look at August. We're not going to actually look at it. I'm just showing you that that's the symbol that we're going by. So August would be considered F1, and then the change from August to September, which is U21, would be considered F2. So the change from August VIX futures price to September VIX futures price. All right, so now let's go back. Let's get this ad out of the way. So now we're going to go from, we're going to look at January 31st through, look at this number. We're looking for, remember, we're looking at F1 to F2, 1.48%. And then let's go to, what do we say, February 8th, right? Look at that, minus 22.95%. That is backwardation right there. And that's a huge percentage swing from the two. So basically at this point, the change between those, the difference between those two, F1 to F2, went from being a 1% difference. So F1 was 1.13. F2 was 1.13% higher than F1. And at this point, F2 was 22.95% lower than F1. That's how much F1 spiked. So in other words, current volatility futures at that point in time, Thursday, February 8th, 2018. So remember the question that I wanted you guys to ask yourself, was your symbol bearish or bullish when this state of backwardation or contango happens? So when it changes from contango to backwardation, and this is a change from contango to backwardation. So right now, 1.13 or 1.48% on January 31st to minus 22.95%. That's huge. Okay, so let's go ahead and adjust these dates. I think I already set them. So look at this, 1/31/2018 to 8/18. I just put it on a day period. And let's actually take a look at a few symbols in a wide variety of categories. I think if we do that, that will help us. And look, let me tell you real quick, the reason why this is relevant is because they say that volatility reverts to the mean. Why is volatility reverting to the mean relevant? It's really only relevant for long-term traders. Short-term traders, they may not really pay attention to stuff like this, like a day trader, somebody who's going to be in and out in one day, or scalper. But volatility reverting to a mean is relevant and useful because fluctuations or heavy, big movement inducing activity does not always last forever. The market is ever changing. Don't forget that, okay? Don't forget. So we're going to look at a few symbols. And here are a few that I chose to look at. Remember, we already got a time frame set up. So let's look at the SPY. Wow. Look at that. Look at those dates. Look at what happened, y'all. That's the SPY. Let's look at another. Let's look at QQQ. Uh-oh. There's another one. And look, we got to look a little bit beyond this when it reverts back to a state of contango where the front month is lower than the front month in volatility is lower than the next month in volatility, month 2. And so we'll look after this, but we're going to just check out a few symbols and then we'll go back to SPY. So we did SPY, we did QQQ. Let's look at a commodity. Let's look at silver, SLV. It's just an ETF though. Okay. Silver went down. Wow. Okay, let's check out another one. Let's look at TLT. Look at TLT. Boom. TLT went down. Let's look at the ultra short ultra short 20-year. So that's TBT. Oh, that one went up. Okay, let's look at some more. Let's check out Apple. What did Apple do during this time? Wow, Apple went down. Let's check out Tesla. Tesla went down. Wow, look at that last day. Look at that last day. It's huge, right? Let's look at Exxon. Wow, look at Exxon. Down big time. Let's look at an industrials ETF, XLI. Industrials were down. Let's check out financials. What about financials? XLF. XLF was down. Wow, wow, wow. No, that's a lot of symbols. Now let's look at a few inverse ETFs. Let's look at some inverse ETFs. Let's try FAZ. Yeah, I mean, you would expect this. Text. Wow, let's check out another. Let's go BRR. Morgan Stanley. Okay, this one's fairly neutral. Check out one more. BIS. Then we'll go back to this is an ultra short NASDAQ biotech. Okay, and this one was up too. So now, but you would expect that from these type of index, inverse ETFs. Let's go back to SPY, y'all, so we can finish this video off because I'm already taking a long time. Let's go back to SPY. Okay, so now let's see when let's go back to our chart and let's see when it comes out of that state of backwardation, 22.95. Let's wait until we're positive again. Almost there, almost there. Wow, it's lasted for a while. Well, look, we don't have, okay, look, February 23rd. All right, fine. Let's go to February 23rd. I was going to say we really could just choose anything when it's higher than, look, this was actually a little bit worse. We could have went to February 9th. Hold on, let's go back. Yeah, we definitely could have went to February 9th. Let's see if that's just a little bit worse. Boom, it sure is. Wow, 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 guys. Look at that, 24.84%. And now let's see when the percentage change. Let's see when it gets close to zero. Okay, February 14th. Let's go to Valentine's Day. And let's see if this would have been a good entry had we waited until we were in a big state of backwardation, a big change from contango. So let's go back to time frame. Let's go to, what did we say? Valentine's Day? I think that might have been a pretty decent entry had we waited until this extreme backwardation had occurred. We could add some more days and just see how much more time had passed. Let's just go to April. Let's see. Yeah, it hadn't quite went that low again. So these probably would have been some pretty decent entries. So anyway, now you may not be able to time exactly when this backwardation happens, or when it changes from contango to backwardations. But if you have some capital on hand when it happens, then honestly, you might find a decent opportunity, as we can see. I want you guys to play around with this website and do the same thing to see if you can't find any other areas of change from F1 to F2, changing from contango to backwardation, and see if you can't find your own opportunities that may have worked for the symbols that you're interested in. Because look, remember, volatility is mean reverting. And it's mean reverting. In other words, volatility reverts back to its mean, so it doesn't stay high or elevated off the chain or even just ultra low for forever. And the reason is because that heavy, big movement inducing activity just doesn't last forever. The market is ever changing. And I keep 30 to 40% of capital always available at all times to make market moves on index ETFs, top index ETF holdings, normal ETFs, or a combination of them all. And I do this based on how much time risk I want to take. So whether I want to open a trade for a few weeks, few months, or a year, to take advantage of, this entry that I got into, this entry for when it went from contango to backwardation. And the other, I also do those things based on how diverse I want the new trades to be and which symbol got beat up the most, so I'll go through this and, each morning I actually have a little spreadsheet that I go through and I keep track of F1 to F2 and I'm tracking the changes of when it's happening, and I time my entries that way. It's not necessarily timing an entry, it's just paying attention to when that broad market volatility makes a difference in the price. So much so that the VIX futures, so the volatility, most people know volatility is the fear index. So when that fear index goes from the front month being lower than the subsequent months to the front month being higher than the subsequent months. So, and also I may not always wait for it to be all the way down for my shorter term trades. Like I said, I just wait for it to change from like 20% to 10 or 15 or 5 or 2 or something, you know what I mean? Just a big change, will mark a big difference in the price. So this is just something that I pay attention to quite a bit. But I got some homework for y'all. I want you to look up the symbols that you like. You don't have to use the same exact time frame I did. You can reset the Zoom. You can go to a lot of these points in time and see the change from contango to backwardation, where the front month, where you see a change from a positive to a negative on the F1 to F2, and see how your symbol reacted. You see how your symbol reacted during that time, and see if it actually makes a difference in your trading. Okay, see if it actually makes a difference in your trading. So look, guys, I know that video was probably a little bit longer than normal, but it was very important, and I wanted to show you guys some examples. And look, if you want more content more often, please don't forget to subscribe, share, and like. Again, it's my birthday. I hope you enjoyed the video as much as I enjoyed making it. I love sharing this stuff because to me, this kind of stuff makes a big difference, and everybody doesn't really talk about it or think about it. And yeah, I'm grateful for the experiences that I've had that put me in a position to want to look these things up and ask myself these questions. All right, guys, I hope this helps somebody. God bless. Thank you so much for watching.